Welcome to Bears in Exile. Today is October 20th, and it is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well, I didn't get to look at the market very much today, and I'm looking forward to next week when everything should go back to normal, and these videos will be posted at a decent time. So, looking forward to that, and away we go. Dow closing up 37 points, and we ended up with a hammer. We did kiss and pierce the upper price consensus level today and backed away from it. We have been saying the last video or two that the short-term moving averages definitely are favoring the bulls at this point based upon their movement, direction, and relative position with the bar. I also have the middle Bollinger Band line below them. Although it is starting to hook up, we're not in danger of a cross as of yet, but still, that is developing. Now this hammer, oh, does that mean, oh, it's at the top of the range and now it's going to reverse? That's really hard to say since we're just kind of stuck as people can't figure out whether we're supposed to be going up or we're supposed to be going down. And so we're going to take a look at everything else and see what it says. CCI was ticking down, got a slight downtick on the slow stochastic. Fast stochastic actually got below the 14-day RSI moving average and has turned around. So that's not good for the bears. Uptick on the RSI, downtick on the histogram, uptick on the MACD. Definitely a mixed bag, and definitely jives with this up, down, up, down, up, down. And notice how the bodies are also getting smaller. So that would appear that we're going to have a directional movement up or down very soon. So beyond that, let's see what else we have to work with. Here's the 60 minutes. And not attractive. Some people may look at this and say, oh, shoulder, head, shoulder. Yeah, I guess maybe, but seems pretty darn weak to me. And that's being generous. It's not attractive. The 60-minute uptick on the CCI, both stochastics heading up. 14-day RSI moving average curling up. Up on the RSI, sloping up on the MACD. Not bad at all for the bulls. So, do we have any divergences? Well, with this choppy movement, it makes it kind of difficult. But yes, we do. On the CCI, we have a lower area here, higher here, higher here. So yes, that's sloping down. Same thing with the stochastic, same thing with the RSI, same thing with the MACD histogram. So yes, we do have negative divergences in play in the 60-minute time frame. So at least the bears have that. SPX, also a hammer. Not as great position as the Dow. Sloping down on the CCI, same with all the other secondaries, most notably with the downtick on the histogram. I'm sure that the divergences are going to be similar, and yes, 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 and yes. So the bears do have that in their favor, and until that is definitively broken, which is possible, at least they have that to work with. Now the VIX is kind of interesting. We have an inverse hammer. Actually, maybe you could even call that a gravestone doji. But fast stochastic turning down. 14-day RSI moving average finally getting into oversold area. Uptick on the slow stochastic, CCI, histogram, MACD, and downtick on the RSI. So except for the candle, this doesn't look too bad. We did get above the lower price consensus level. We did close below it, but it did have a nice pierce to it today. And on the 60-minute, do we have any positive divergences? Well, it's not really pretty. Certainly we have one in the... it's not attractive. It's definitely not what I would be hoping for. So, I'm just going to say no. I'll just be real conservative and not try to make anything fit the crime, but I'm just going to leave that one alone. Too ugly. TNA. Well, have a little dragonfly looking doji. It did kiss the lower price consensus level and backed away. It is still below the major price consensus level. The positioning of the short-term moving averages looks weak, and at this point that it is just going to whittle away at the bearish bar. In no way near as strong as the Dow and the SPX. Certainly the fast stochastic turning up with the 14-day RSI moving average, but we don't know if it's going to join it all the way to the top. If it does, certainly that'll be a great position to short when it starts to turn down again. But for the moment, we are not getting that strong down move on the stochastics below the 14-day RSI moving average to turn around at the bottom or near the bottom, hook around and meet it up with it. So that's unfortunate. But downtick on the CCI, uptick on the RSI, downtick on the histogram, and almost a side tick on the MACD. And looking at the 60-minute for divergences, yep, we have it in the CCI, in the stochastics, in the RSI, and in the MACD. So, just like the Dow, just like the SPX, the bears have that. And now for the really important stuff. UUP. Okay, we have an inverse hammer. We don't have good positioning of the short-term moving averages for being expelled. Certainly at the high of the day, that would have looked really good as a signal for expulsion from the bar, but it did fall back, and we're still waiting. It did pierce the upper price consensus level, and it did not quite get to the lower price consensus level. Certainly the 14-day RSI moving average mirroring the Dow and the SPX in that it is running, and that the fast stochastic is meeting it and turning. Now we do still have the uptick on the MACD histogram, not the MACD itself. RSI ticking down, slow stochastic ticking up. We really need to see this above the 20, and uptick on the CCI. What kind of a mess, you know, just push and pull, and somebody's going to win here real soon. So 60 minutes. Now we don't like to look for divergences in the currencies because they are completely controlled by the news. And, you know, occasionally, of course, the news can be kind of foretold by the indicators, but certainly it is not nearly as good as it would be on the major indexes. And we do have positive divergence in the CCI and the stochastic and the RSI and the histogram, but we're still waiting. Just comes down to that, the old waiting game. FXE, hammer. Yeah, we want this to fall. That would be good for the bears. Yes, the short-term moving averages are not in a good position fighting with the bar. Looks like it is just a movement to weaken it, which it is doing. Middle Bollinger Band sloping up pretty good. Maybe we'll get across in the next couple of days. It did kiss the major price consensus level today and backed away from it. The stochastics actually look a little bit better than some of the other things. Yeah, we have a side tick on the fast stochastic. Slow stochastic still pointing down. 14-day RSI moving average still pointing up. And down tick on the CCI, the MACD, histogram, and a uptick on the MACD. And looking for a confirmation of divergences in FXE. Looking for negative divergences to help confirm UUP. And you know, it's not really, well, there's some. We have a negative divergence there. It doesn't quite do it later on, which I don't like. So I guess you could consider this, but it is sloppy. So, and if you apply that standard to it, yes, you have it in the histogram, or the stochastic, the RSI, and the MACD histogram. So, wait and game, wait and game. GLD, ooh. We've been talking about the double flatline and that it was much more likely to go down. Little gap down today, semi-decent, ended with a little doji star. CCI very low, stochastics on their way down. Looks like it will meet up with the 14-day RSI moving average before it gets its move up. We have been saying that we want it to get everything to the bottom and have the 200-day moving average hold. Then it will be in a really good position for a move up. So that seems to be unfolding very well. Downtick on the histogram, downtick on the MACD, looking for the bearish cross, downtick on the RSI. And so at least this one seems to be clearly doing what it should be doing, and that's encouraging. SLV, we said this one had a better outlook than gold in the short term, just because of the space between it and the short-term or long-term moving averages. Yeah, it had a down day today. Yeah, it's a spinning top. Yes, the short-term moving averages are pointing down. Yes, we're getting the cross on the middle Bollinger Band. With those in mind, yeah, this doesn't look good. It looks just like gold. But also notice the 14-day RSI moving average is getting right to the 20 line. The stochastics are still pointing down, of course, and downtick on the histogram. But look, not a downtick on the MACD, and uptick on the RSI. This one to me still looks like it has a better shot than gold does of going up in the future, or at least not going down nearly as much as gold should be. So, but once we have this cross of the middle Bollinger Band line, if we get it, that certainly will be a bearish sign. But even with that, I don't think this one's going to get beat up as much as gold. And there you have it. Certainly, it would appear that the Bulls have slightly better odds than the Bears do at this moment, but the Bears do have a few tricks left in their hat and up their sleeve, and they are not out of this game yet. So, just waiting. Tomorrow is options expiration. Should be pretty interesting. I'm not going to get to see it, but it should be pretty interesting. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.